Adani's had a tough 2 years, no doubt. We all saw the Hindenburg allegations and the impact they had. But now it seems like they're back on track, expanding aggressively in key sectors. And today, I want to talk about why Adani is so interested in the cement industry. First off, after a bunch of takeovers in recent years, there are reports that Adani is now eyeing the Indian cement arm of Germany's Heidelberg Materials. So yes, they're going big in this space. But this aggressive expansion didn't start yesterday. It was in 2022 when Adani Group closed a huge deal to acquire stakes in Ambuja Cement and ACC from Holcim, the world's largest cement maker. Now, this move instantly made Adani the second largest cement player in India. Now, this isn't just about Adani. The whole cement sector is going through massive consolidation. Companies like Dalmia Bharat and Ultratech Cement are also buying up smaller firms. In fact, in July, we just covered a story on Ambuja buying out Penna Cement Industry in a $1.25 billion deal, which helped it strengthen its presence in South India. And here's an interesting fact. The top 5 cement companies in India have also grown their market share by 9% over the last few years. Now, that means few companies are controlling more of the cement market. So yes, there is a power shift happening in the industry. Now, Ultratech is still the market leader, but Adani is giving them serious competition. Now, let's talk about Heidelberg Materials, the latest company Adani has its eyes on. Now, Heidelberg entered India back in 2006 and has 4 plants with a total capacity of 12.6 million tons a year. But recently, they've struggled. They've lost market share and even posted their first profit drop in 5 quarters. Now, this opens up a perfect opportunity for Adani to make a move and strengthen its position in the cement market. Now, let's talk about why Adani is doubling down on cement. India is the second largest producer of cement in the world, and with rapid urbanization, massive infrastructure projects like roads, airports, and the push for affordable housing, cement demand is skyrocketing. Now, if we want to become a developed company, we need to build, and we need to build big. And for that, we need a lot of cement. Now, Adani is already deep into infrastructure, ports, airports, power plants, you name it. Now, cement is a key material for all of these projects. Now, by owning cement companies, Adani can cut down costs on its infrastructure projects, control the supply chain, and create synergies across the board. Now, big companies also have the advantage of scale. They can produce things more efficiently because they operate at a massive level, which helps cut costs across all their businesses. Now, in the cement business too, scale matters. Now, with all the consolidation going on in the cement industry, fewer companies are controlling more of the market. That gives the top players a lot of power, especially when it comes to pricing. Now, if you've got fewer competitors, it is also easier to raise or stabilize prices as demand increases. And we all know higher prices equals better margins. In fact, the current consolidation has also allowed the top players to capture a large portion of the market, leading to some substantial growth in their revenues and profits. So what happens if Adani manages to acquire Heidelberg? Well, that would further solidify their position and make them an even bigger competitor to Ultratech. For the cement industry as a whole, this means we'll see fewer but bigger players controlling the market and the prices. All in all, Adani's interest in cement is not just random. They're betting big on India's growth story, especially with cement being such a critical part of infrastructure. And with the consolidation trend in full swing in the cement sector, Adani clearly wants to be one of the top players in this game. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.